हेलो गाइस, वेलकम बैक टू आदित्य फाइनेंशियल इनसाइट। तो गाइस, इस वीडियो में हम NISM सीरीज 8 इक्विटी डेरिवेटिव सर्टिफिकेशन एग्जामिनेशन कोर्स में हम आपको चैप्टर नंबर 9 शुरुआत करेंगे। तो अभी तक जितने हम लोगों को पढ़ा है सभी चीज़ पढ़ लिया। अब उसका जो भी होता है गवर्नमेंट के थ्रू जो टैक्स देना होता है उसके बारे में हम पढ़े हैं। तो इसमें है गाइस ऑडिट एंड टैक्सेशन यानी अकाउंटिंग एंड टैक्सेशन। तो इसमें जो भी आप लोग हम लोगों ने पढ़ा टेस्ट ट्रेडिंग फ्यूचर ऑप्शन मैकेनिज्म जो भी है, उसके बाद जो आप गवर्नमेंट के थ्रू इसमें जुड़े होते हैं उससे हम लोग पढ़ेंगे क्या हम लोग टैक्स पे करते हैं। तो इसमें पढ़ने के बाद हम लोग क्या देख सकते हैं, स्टडी इन दिस चैप्टर यू शुड नो अबाउट द अकाउंटिंग ट्रीटमेंट ऑफ डेरिवेटिव कॉन्ट्रैक्ट एंड टैक्सेशन ऑफ डेरिवेटिव ट्रांजेक्शन इन सिक्योरिटी। तो क्या टैक्सेशन लगता है उस पर हम पढ़ेंगे। तो सबसे पहले हम शुरुआत करते हैं गाइस अकाउंटिंग से। ठीक, अकाउंटिंग फॉर फॉरवर्ड कॉन्ट्रैक्ट एज पर द अकाउंटिंग स्टैंडर्ड 11। अकाउंटिंग के अनुसार फॉरवर्ड कॉन्ट्रैक्ट होता है जो स्टैंडर्ड 11 के अनुसार। व्हेन फॉरवर्ड कॉन्ट्रैक्ट इज फॉर हेजिंग, व्हेन फॉरवर्ड कॉन्ट्रैक्ट इज फॉर हेजिंग, हेजिंग के लिए क्या क्या है इसमें देख सकते हैं। प्रीमियम और डिस्काउंट, डिफरेंस बिटवीन द वैल्यू ऑफ एट स्पॉट रेट एंड फॉरवर्ड रेट should be amortized over the life of contract. Exchange difference between the value of settlement date and reporting date, value at previous reporting date, inception of the contract is recognized in profit and loss assessment of the year. Profit and loss, profit and loss cancellation, renewal of forward contract are required in profit and loss of the year. When forward contract is for trading and speculation, forward contract is for trading and speculation. No premium or discount is recognized. A gain or loss, the difference between the forward rate is for the contract previous year in value rate and forward rate available at the year in reporting date for the remaining maturity period should be recognized in profit loss of the period. Profit and loss on cancellation, renewal of the forward contract are recognized in profit loss of the year. Accounting of equity index and equity stocks future in book of the client. इसमें गाइस क्या है क्लाइंट का। The Institute of Chartered Account of the India has issued guidance note on the accounting of index future contract from the viewpoint of party who enter into such future contract as buyer or seller for other parties involved in the trading process, like brokers, clearing corporation, a trade in a equity index future, similar to trade in a shares, and does not pose any peculiar accounting problem. Hence, in this section, we shall largely focus on the accounting treatment of equity index future in the book of the client. Accounting at the inception of the contract, accounting of the initial margin. Every client is required to pay. Every client is required to pay the trading member, clearing member, initial margin determined by the clearing corporation as per the bylaw and regulation of the exchange for entering into equity index stock future contract. Such initial margin payable should be debited to initial margin equity index equity stock future account. Additional margin, if any, should also be accounted for the same manner. It may be mentioned that at the time when the contract is entered into for purchase sales of equity index future, no entry is passed for recording the contract because no payment is made at that time except for the initial margin. At the balance sheet date, the balance in the initial margin equity index equity stock future account should be shown separately under head currency asset. Where any amount has been paid in excess of the initial and additional margin, the excess should be disclosed separately as deposit under the head current asset. Where instead of paying initial margin in cash, the client provides bank guarantee or lodges security when the member, a disclosure should be made in note to the financial statement of the client. This will not require any accounting entry. Deposit for the initial margin kept. Deposit for the initial margin according to Debit out to bank account. Initial margin paid adjusted from deposit into margin account debit. To bank account deposit for initial margin account. Initial margin return released. Bank account deposit for initial margin according to deposits to initial margin account. Suppose Mr. X purchased a future contract on 5 March 2023. The initial margin calculated as per SPNA 5,000. The 50,000. The margin of the subsequent day calculated as per स्पैन फॉलो 6 मार्च 2023 को 55,000 है गाइस, इसे देख सकते हैं। और 7 मार्च 2023 को 45,000 और 8 मार्च 2023 को 43,000। तो 1 मार्च ऑन 5 मार्च 2023 इनिशियल मार्जिन इक्विटी माइनस फ्यूचर अकॉर्डिंग टू डिपॉजिट 50,000 टू बैंक अकाउंट 50,000। ठीक, ये 5 मार्च के अनुसार है। ठीक, अब हम देखते हैं बिंग इनिशियल मार्जिन पेड ऑन इक्विटी फ्यूचर कॉन्ट्रैक्ट ऑन 6 मार्च इनिशियल मार्जिन माइनस इक्विटी फ्यूचर अकाउंट को decreted to bank account. So 5,000 and 5,000 being additional margin paid to exchange. ये exchange को paid किया। On 7 मार्च 2023 बैंक अकाउंट को डिपॉजिट to initial margin minus equity future 10,000 and 10,000. On 8 March initial margin minus equity future 2,000 to bank account credit. Being future margin paid to the exchange. Accounting at the time daily statement settlement payment received of market to market margin. Payment made or received on account of daily settlement by the client would be debited and credited to an account titled as mark to market margin. Mark to market margin, equity index, equity stock future account, mark to market margin account can be mentioned index stock wise so as to facilitate calculation of provision for loss. Such payment receipt can be through a bank account or through a deposit kept with a clearing number and debited to an appropriate account say deposit for mark to market margin account. At the year end, any balance in the deposit for mark to market margin account should be shown as deposit under head current asset. Deposit for mark to market margin kept. Deposit for mark to margin account declared to bank account. Market to market margin paid adjusted for the deposit. Market to market margin account to declare to bank deposit of market to market margin account and market to market margin receipt. Bank deposit for mark to market margin according to declared to mark to market margin account. Accounting for open interest as on balance sheet date. Debit and credit. Balance in the mark to market margin, equity index, equity stock, future account, the net amount paid received on the basis of movement in the price of index future till the balance sheet date. Keeping in view producing principal provision should be created by a debit to the profit and loss amount of anticipated loss equivalent to the debt balance in the mark to market margin account. Net amount received represented by the credit balance in the mark to market margin account being anticipated as profit should be ignored and no credit for the same should be taken in the profit and loss account. Debit balance in the said mark to market margin account. Net payment made to brokers should be shown under the head current asset, loan and advance in the balance sheet, and the provision created thereagainst should be shown as a deduction from. On the other hand, the credit balance in the said account, the net amount received from the broker, should be shown as a current liability under the head current liabilities provision in the balance sheet. Such provisions shall be calculated index by stock by means all series of the stock shall be combined. Provision for loss on equity stock, equity index, future auto understanding at the balance sheet. Opening provision by less hence increase profit and loss accounting to debit. So provision for loss on equity stock, equity index, future account. Opening provision for loss equity stock, equity index, future account to decrease it to profit and loss. To illustrate, suppose Mr. A pays amount 5,000 as market margin on equity future contract. The following accounting interest would be made: book of account, profit and profit account, debit 5,000 to provision for loss equity future 5,000, being provision made for the amount paid of clearing member, trading member because of movement in the price of future contract. Accounting at the time of the final settlement or expiring of the contract. At the expiry of the stage of equity index future profit and loss on the final settlement of contract in the series should be calculated as the difference between final settlement price and contract price of all contract in the series. The profit and loss so computed should be recognized in the profit and loss account by the corresponding debit and credit to market margin account. Same accounting treatment should be made when a contract is expired up by the entering into reverse contract. If more than one contract is respect of the relevant series of equity index equity, a stock future contract to which expire of contract patent of outstanding at the time of expiring of the contract price of the contract expired up should be determined using weighted average method of the calculating profit and loss on expiring up. On the settlement of the equity index, equity stock future contract initial margin paid in respect of the contract is raised, which should be credited to initial margin account, and the corresponding debt should be given bank account or the deposit account. If profit on settlement expiring of margin to market mark to market margin according to account to deposit to profit and loss account. If loss and settlement expiring of profit and loss account debit to market margin account entry for release or initial margin will be bank account deposit for initial margin account debit to initial margin account. Accounting in case of default. Accounting in case of default. When a client default is making payment in respect of daily settlement, the contract is closed out. The amount not paid by the client is adjusted against the initial margin. Excess margin, if any, release, and shortfall, if any, will be payable by the client. Accounting treatment. Accounting treatment in this record will be same expended earlier. The amount of profit or loss on the contract so close out should be calculated and recognized in profit and loss account in a manner described earlier. Disclosure क्या है guys? The amount of bank guarantee and book value as also market value of security clauses should be disclosed in respect of outstanding contract at every year in where the initial margin money has been paid by way to bank guarantee and lodging of security separately for each type of instrument. The number of future contracts, no settle open interest, number of contracts, number of units pertaining to those contracts at the balance sheet data should be disclosed separately for long and short position. In the respect of each equity index, future index stock by accounting for equity index option in case of cash settle option. Accounting at the inception. accounting at the inception of the contract. The seller writer of the option is required to pay initial margin for entering into the option contract. It should be debited to an appropriate account, say equity index, stock margin account. In the balance sheet, such accounts should be shown separately under head and current assets. The buyer holder of the option is required to pay premium. In the book of the buyer holder, such premium should be debited to an appropriate account, say equity index, stock option premium account. In the book of the seller writer, such premium receipts should be credited to an appropriate account, say equity index, stock option premium account. Accounting at the payment receipt of margin. Payment made or received by the seller and writer for the margin would be debited to the bank account, and corresponding debit to credit for the same should be made equity index stock option margin account. Sometimes the client may deposit lump sum amount with the trading and clearing member in respect to the margin instead of paying receiving margin on daily basis. In such case, the amount of margin paid received from into such account should be debited and credited to depositor for margin account. At the year end, any balance in the deposit of margin account should be shown a deposit under the head and current asset. Interest will be similar to the initial margin on the future explained earlier. Accounting for open option on balance sheet. The equity index stock option premium account should be shown under the head current asset, current liability as case may be. In case multiple option, interest recommendation may be made in one equity index stock option premium account. Respect of the option or stocks balance of the composite account should be shown under head current asset or current liability as the case may be, but the calculating provision for loss of stock by index Y and divisible. In the book of the buyer holder, provision should be made for the amount by the which premium paid for the option exceed premium prevailing on the balance sheet date since buyer holder can reduce his loss to the extent for the premium prevailing in the market by expiring of the transaction. This excess of premium prevailing market on the balance sheet date over premium paid is not recognized on the considering of previous provision to create should be credited to provision for loss on equity index. A tax option account, the provision made as above should be shown as a deduction from equity index, a stock premium which is issued under the current asset. In the book of the seller's writer, and provision should be made for the amount by the which premium prevailing on the balance sheet date exceed the premium received for that option. The excess of premium received over a premium prevailing on the balance sheet date is not recognized on the consideration of productions. This provision should be credited to provision for loss on equity index or stock option account with corresponding debited to profit loss account, equity index stocks option premium account, and provision for loss on equity index or stock option account should be shown under current liability and provision. In case of multiple open options at the year end, stock by index by provision should be made considering all options of any strike price and any expiry date under that stock index together. Profit and loss bout should position of each stock adjusted, and if net result is loss make provision, and if result gain ignore it. The amount of provision required in respect of each stock index should be aggregated, and composite provision for loss on equity stock index option account should be credited by the debit profit and loss account. In case any opening balance in such provision account is there, same should be adjusted against provision required in the current year, and profit and loss account debit credit balance provision required to make excess provision retained back. Accounting at the time of financial settlement. Accounting at the time of financial settlement. In the book of buyer and holder, the buyer holder will recognize premium as an expense in the profit and loss account. On exercise of the option, buyer and holder will receive favorable difference between the final settlement price, and exercise expiry date, and the strike price, which will be recognized as income. In book of seller and writer, the seller writer will recognize premium as income in profit and loss account. On exercise of option, seller and writer will pay adverse difference between final settlement price as on exercise expiry date and the strike price. Such payment will be recognized as a loss. As soon an option getting exercised, margin paid towards such an option will be released by the exchange, which should be credited to equity index stock option margin account, and bank account will be debited. Accounting at the time of expiring of an option contract. The difference between premium paid and received on the expire of transaction should be transferred to the profit and loss amount. Accounting treatment in the same as above in the book of the seller and writer of margin money released on the expiring of an option contract for working out profit or loss in case of outstanding multiple options on the same stocks index with the same strike price and the same expiry date. Weighted average method should be followed on the expiring of transaction exercise before the expiry date. Accounting treatment in respect of equity stock option in case of deliveries settled option. The accounting entire at the time of inception, payment, receipt, margin and open option at the balance sheet date will be same as those in case of cash settled option. At the time of final settlement, if an option unexpired, then the accounting entire will be same as those in case of settled option. If the option exercised, then share will transfer in consideration of cash at the strike price. In such case, accounting treatment will be recommended in following paragraph. In case buyer and holder, for a call option, buyer holder will receive equity share for which call option by entered into buyer and holder should be debited and relevant equity share amount carried cash back. For the put option, buyer and holder will deliver equity share for which put option was entered into the buyer holder should be credit relevant equity share account and debited cash bank. In case seller and writer, for call option, the seller and writer will deliver equity share for which the call option by enter into the seller writer should credit the relevant equity share account and debited cash bank. For a put option, seller writer will receive equity share for which the option by entered into the seller writer should debit the relevant equity share account and credit cash bank. In addition to this entry, premium paid received will be transferred to the profit and loss accounting enters for which should be same as those in case cash settled option. Disclosure: the enterprise should disclose the accounting policy and the method adopted, including criteria for recognition and the basis of measurement applied for equity index option, equity stock option, where initial margin is paid by a bank guarantee and lodging of security, the amount of such bank guarantee, bank value, and market value of the security in respect of outstanding option at the year. The buyer, holder, and seller writer of the option should be given following details in respect of option contract outstanding at the year in each equity index option future. Accounting for equity stock option. Accounting for equity stock option. Accounting for equity stock option which settle in cash. Accounting interest of equity stock option settled in cash will be same as the in case equity option. This is because both the case of settlement is done otherwise than by delivery of underlying asset. Accounting for equity stock options which are settled by delivery. Accounting entries at the time inception, daily receipt, payment of margin and open option at the balance sheet date will be same as the cash of the cash settled option. Taxation of derivative and transaction security. Taxation of derivative and transaction security में क्या है? Taxation of profit loss on derivative transaction in security. Gain or loss arising from transaction in derivative on exchange taxable under the head of profit and gain from the business or profession. Business gain or loss are classified either with non-speculative or speculative income. Any loss arising from the speculative business can only be set off against gains from the speculative business. Prior to financial year 2005 to 6, transactions in derivative were considered as a speculative transaction for the purpose of determining tax liability under the Income Tax Act. This is view section 43(5) of the Income Tax Act, which defined a speculative transaction as a transaction in which contract purchase or sell any commodity including stocks, shares, periodically ultimately settled otherwise than by the actual delivery or transfer the commodity or stock. In view above provision, most of the transactions entered into derivative by the investor and trader we consider as a speculative transaction. The tax provision provided for differential treatment with respect set of carry forward loss such a transaction. During the that period, loss on derivative transactions could be set off only against other speculative income and same could not set off against any other income. This resulted in payment for higher tax by SS. Finance Act 2025 Finance Act 2005 में बनाते हैं याद है amended section 43(5) so as the include transaction in derivatives carried out in recognized stock exchange for this purpose. This implies that income or loss on derivative transactions which are carried out in recognized stock exchange is not taxed as a speculative income or loss. Thus, loss on derivative transaction can be set up against any other income during the year, except salary income. In case the same cannot set off, it can be carried forward on the subsequent assessment year and set off only against any other non-speculative business income for the subsequent year. Such losses can be carried forward of period 8 assessment year. However, the assess enjoy the right to carry forward and set up unabsorbed losses from the derivatives transaction only when the return of income has been filed or before due date. It may also be noted security transaction tax paid on such transaction is eligible as deduction under Tax Income 1961. The Income Tax Act 1961 ने बना था Income Tax 1961 Income 1961 Income Tax Act 1961 ने बना था भाई. In case of foreign portfolio investor (FPI), the gains or loss arising from the derivative transaction on the recognized stock exchange taxable under head capital gains. Since a majority of the derivative contract traded on the stock exchange have a maturity up to 3 months, gain or loss arising from future and option trade are generally taxable as short-term capital gain or loss. Any income from option trading can be offered to taxation either under normal scheme of taxation under presumption scheme of taxation under Section 44 AD. If the total turnover does not exceed 2 crore, under the presumptive scheme on taxation, gains from derivative trading is at a rate of 6% turnover without allowing any tax deduction or expense. तो गाइस दो अंदर 2 करोड़ के ऊपर अगर नहीं है प्रॉफिट तो आपको 6% पर ही आपका होता है टैक्स, जो कि सेक्शन 44 AD में फ्यूचर एंड ऑप्शन. तो देख सकते हैं केस व्हेन टैक्स ऑडिट इन मैंडेटरी case when the tax audit is not required. If turnover exceeds 10 crore, regardless of profit or loss under सेक्शन 44 AB, अगर 10 करोड़ से ज़्यादा टर्नओवर है तो आपको 44 AB में आना होगा. अब फ्यूचर एंड ऑप्शन टर्नओवर बिलो 2 crore and you declare profit at least 6% or more of the turnover under section 480. तो फ्यूचर एंड ऑप्शन 2 करोड़ के अंदर टर्नओवर है तो 44 एडी में जाइएगा, ऐसे 44 एबी में जाइएगा 10 करोड़ के अंदर. ठीक. इफ टर्नओवर बिटवीन 2 करोड़ एंड 10 करोड़ विदाउट presumptive taxation and profit are less than 6% of turnover. तो भाई if the turnover 2 से 10 करोड़ के बीच में है विदाउट कोई presumptive taxation है तो प्रॉफिट 6% से कम आपको लगेगा. वही if turnover between 2 crore and 10 crore and more than 95% transactions are digitally, a tax audit not necessary regardless of profit loss section AB. तो प्रॉफिट एंड लॉस सेक्शन AB में हो जाता है. 2 करोड़ से 10 करोड़ के बीच में भी है जो कि रिक्वायर्ड नहीं है, पर 95% ट्रांजेक्शन डिजिटली टैक्स ऑडिट नेसेसरी नहीं है तो सेक्शन 40 AB में चला जाएगा. फ्यूचर एंड ऑप्शन टर्नओवर 2 करोड़ तो नीचे तो 44 ADA एंड 44 AB ये आधा रखना पड़ेगा. तो देख सकते हैं सिक्योरिटी ट्रांजैक्शन टैक्स STT. STT is a security transaction tax that is levied on every purchase on sale security that are listed on the index stock exchange. STT is levied on transactions involving equity derivative, equity oriented mutual fund. In case of derivative transaction, exchange on which transaction took place is required to collect deducts and STT and remit the same to the government. Traders have to pay security transaction tax on derivative transaction is accrued on the recognized exchange as per the rate given below. Taxable security transaction STT rate and payable. Sales and option security 0.10% and seller. Sales of an option in security where the option is exercised 0.125% purchaser and sales of future security 0.02% seller. देख सकते हैं इस तरह का आपका टैक्स लगता है चीटिंग. वैल्यू ऑफ टैक्सेबल सिक्योरिटी ट्रांजैक्शन रिलेटिंग टू एन ऑप्शन इन सिक्योरिटी शैल बी ऑप्शन प्रीमियम. इन केस ऑफ सेल ऑन ऑप्शन सिक्योरिटी वैल्यू ऑफ टैक्सेबल सिक्योरिटी transaction relating on option security shall be settlement price in case of sales of an option in security where the option is exercised where a derivative contract is being settled by the physical delivery. Shares in case of physical settlement such transaction would be similar to the transaction in equity share where the contract is settled by the actually delivering of share. Therefore, STT are rate as applicable on delivery basis equity. Transaction would be applied to such derivative transaction. To STT for the delivery based equity transaction, 0.1% can payable both seller and purchaser. तो देख सकते हैं अगर सेल फ्यूचर सिक्योरिटी में करते हैं तो 0.02% लगता है और अगर सेल्स ऑप्शन सिक्योरिटी में करते हैं तो 0.10 लगता है. तो अभी कुछ बढ़ा था. Exchange adopt the following procedure in respect of calculating and collection of the security transaction tax. STT is applicable all sale transactions for both future and option contracts. For the purpose STT, each future trade is valued at the actual trade price and option trade is value premium. On this value, STT rate are prescribed is applied to determine STT liability in case voluntary or final exercise of an option contract. STT is levied on settlement price on day exercise if the option contract is money. STT is payable by the clearing member in sum total STT payable by all trading member clearing under him. The trading member liability is aggregate STT liability of client trading through him. तो यहाँ पर कुछ सैंपल है गाइस क्वेश्चन पर, तो देख लेते हैं. ये चैप्टर समाप्त हो गया है. तो देख सकते हैं सैंपल क्या है. Profit from derivative transaction for Indian investor are taxed as speculative income under the head profit gains business profession. Short-term gain under head capital gain, no. Derivative transaction करा. Non-speculative income under the head coming from the source, no. Non-speculative income under the head profit gains of business profession. तो ये गाइस सही है. प्रॉफिट फ्रॉम डेरिवेटिव ट्रांजैक्शन में जो भी रहता है नॉन स्पेकुलेटिव में आता है डेरिवेटिव का, जो कि हेड है अंडर द हेड प्रॉफिट एंड गेन्स ऑफ बिजनेस और प्रोफेशन में आ जाएगा. तो बिजनेस एंड प्रॉफिट में डेरिवेटिव ट्रांजैक्शन का, ठीक है गाइस. इन केस फॉरेन पोर्टफोलियो इन्वेस्टर gain or loss arising from the derivative transaction or recognize stock exchange taxable. Long term gain capital and short term gain capital, speculative gain and income other. तो इंडियन के लिए हो जाएगा गाइड आपका बिजनेस और प्रोफेशन नॉन स्पेकुलेटिव इनकम में चला जाएगा इंडियन इन्वेस्टर के लिए, ठीक. और वहीं एफपीआई के लिए शॉर्ट टर्म गेन कैपिटल में चला जाएगा. तो ये अंतर है गाइड. जब भी डेरिवेटिव ट्रांजैक्शन टेस्ट करते हैं तो इंडियन इन्वेस्टर के लिए आपको प्रॉफिट है गेन बिजनेस और प्रोफेशन में चला जाएगा नॉन स्पेकुलेटिव इनकम में, जबकि बाहरी इन्वेस्टर के लिए शॉर्ट टर्म गेन कैपिटल में चला जाएगा, ठीक. ये डेरिवेटिव पर है, ठीक. तो गाइस चैप्टर 9 खत्म हो जाता है. नेक्स्ट लेक्चर में हम पढ़ेंगे सेल्स एंड प्रैक्टिस एंड इन्वेस्टर प्रोटेक्शन सर्विस. तो ये आखिरी चैप्टर है गाइस इस इक्विटी डेरिवेटिव सर्टिफिकेशन का. तो थैंक यू.